Well, moving on now to one of the interviews we had to have earlier with Maurice Odur. We now have him back on the line. Well, good afternoon, Maurice. If you can hear me, what do you make of the week that was this particular week?
Thank you, Abby. And if you look at a number of things that happened in the investment space last week we saw the GDP growth rate figures coming out about 5.9, which is one of the strongest GDP growth rates that we've recorded, let's say, if you can say for a period of like the last 3 years. And mainly, the key driver, we saw tourism coming up very strongly. As a result of the recovery, the government has been putting in place terms of initiative to ensure that the security. We saw tourism recording a very strong growth. Of course, also we saw strong growth coming from agriculture, and also the financial services recorded very impressive growth. And all these sectors enabled the economy to grow at 5.9%, which is very strong. Also, there was a surprise in the last week also in terms of the inflation rate that came out. We saw inflation coming out about 5.8%, which was very high from about 5% from the previous month. And all these indicators are showing that now, as much as the economy is growing, but there are a lot more that need to be done in terms of monetary policy to cushion the economy from the shock from the three price levels, which is the prices of goods and services, interest rates, and also the exchange rate. We also saw the shilling coming up. We also saw the news that the central bank, in the weeks of the Brexit, the central bank used the reserve level reduced because as the government was using the currency, the forex reserve to show up to protect the Kenyan shilling. And all this again points to the potential vulnerability of the Kenyan economy in terms of what's happening in the global economic environment. All this, we saw again the performance of the stock exchange continuing on a downward trend. A number of large cap stocks have also continued to lose. If we look at the stocks like KCB currently trading at about 33.5% from about 49% at the beginning of the year. We also saw a number of stocks like, again, banking stock like Equity Bank, also as a result of the foreign interest. The stock was gained from about price of 39%. And again, we are continuing Safaricom continue holding the market in terms of its market share, which again is also reflecting in the performance of the market.
So Maurice, of course, we do expect a number of events to be held in Nairobi, that being UNCTAD as well as TICAD. But before we get to that, we've also seen a particular stock, the Uchumi stock. It was among the biggest losers today, and it shed off close to 4%. And from where you see it, what's the talk around the Uchumi stock?
If you look at performance of Uchumi, this is a stock that has been somehow like plagued with a lot of bad news. And if you look at where we are still, nothing concrete is coming out in terms of the recovery plan, in terms of how they plan to salvage the company, in terms of how they plan to come to bring the company out of the huge that the company is facing, and in terms of the strategy they have in place, continuous spurring growth for this retail chain. Nothing concrete has been coming out. This one now we are seeing showing in the market, and the investors continue the confidence of investors in this market, in this stock continue eroding, and we are seeing the stock continue dropping. Now, even as today, as you've said, already dropped 4%. So the main thing that is making Uchumi suffer is that there's so far still no concrete result that is being put out, no concrete recovery plan that has been put out even to the shareholders.
So Maurice, NSE 20 share index has also not been up as it was beginning of January. It's sort of lost close to 400 points. Perhaps what's your interpretation of this? Are the markets unable to rally as was expected when 2016 kicked off?
If you look at the performance of the stock market, especially if compared to the beginning of the year, look at a lot of things that are happening in the global economy. First of all, we started the year with the transition of the Chinese economy. And you will remember the China is one of the biggest economies in the world as we speak. And again, if you remember, beginning of the year, there's a lot that are happening in terms of the global economy. US was expected to increase the interest rate, which again, now all indicators are pointing that they are unlikely to continue increasing interest rate. We also recently just the Britain leaving the Eurozone. And if you look at all this that are happening in the global economy, points again now to the indication of the direction of the stock market. Because if you look at the Kenyan market, is mainly driven by foreign investors. And whenever there's something happening negative that affects the performance of the global economy, we'll see that one reflecting in the Kenyan local market. If you look at from the way we are coming from, again, we are coming from a very high interest rate environment. We are coming from an environment where the most listed counters were not performing as expected. And again, we are continuing seeing a number of companies releasing lower than expected earnings. Though if you look at from banking sector, a number of banks have managed to record double-digit growth, but there are some banks that didn't do as well as was expected. And one of these banks was KCB, which is the number 2 largest bank by market share in the market. And we saw KCB recording a profit growth of 6%, which was dismal compared to what the market expected. All this put together, Abby, is what is ailing the performance of the stock market, and we are continuing seeing the C20 share index now is already down like 9.5%.
All right.
Okay.
Many thanks, Maurice. Of course, I can't leave you without asking you, what's your outlook come next week? We've seen Kenya Airways has announced the staff rationalization. In brief, what's your take on the move by the airline?
If you look at the Kenya Airways, especially the thing that, if you look at a company, the thing that usually ails a company should have to ensure that now the costs are managed, and again they should ensure that their products are delivering to the market. And if you look at the decision that has been taken by KQ management, now they are going into the cost rationalization process in terms of right sizing, in terms of the staff, so that they reduce just having a large number of staff that are not doing anything. And all these are the measures that we've been saying that KQ need to put in place so that they continue growing the company, they continue bringing the company back to profitability path, just for the benefits of the shareholders. And going forward, if they continue putting such measures in place, we'd like to see confidence coming back slowly into the stock, and which again will reflect the performance of the stock in the stock market.
Well, many thanks there, Maurice Oduor, investment manager with Sciton Investments, just giving us insights on what to expect from the stock markets, as well as some of the stocks to watch out for come next week.